Let me tell you about a landlord who thought she was protected. She had liability insurance. She even had an umbrella policy. She had a property manager. She owned a bunch of properties, 15 to be exact. On paper, she looked like she had done what every landlord is told to do. Then 2 workers died at one of her properties, and her insurance company denied the claim, all of it. Here's what happened. She owned a commercial building, and her property manager hired a window washing crew. Just a routine job, nothing unusual. The crew showed up, started working. Unfortunately, they were using a metal squeegee that hit a high voltage line and ended up killing 2 of the workers. Now you have 2 wrongful death claims. Horrible situation. And the landlord turns to the insurance company, says, can you cover this? And the carrier says, no coverage. Why? Because the policy had a condition. Any contractor brought onto the property had to carry a valid license, bond, and insurance. And this crew's license and bond had lapsed, unbeknownst to anybody. And here's the part that should make every landlord watching this very uncomfortable. The license and bond information was sitting right there on a business card. It was on the company's invoices, and it was in the company's file. Nobody checked whether it was still active. Not the landlord, not the property manager. And because that condition was not met, the insurance company denied the claim. When the umbrella policy then did what umbrella policies do, they follow the underlying policy. So when the underlying coverage disappeared, the umbrella disappeared too. Now the landlord was staring at wrongful death judgments personally. And because she owned everything in her name, like there was no LLC separating out the property, she did what a lot of people say, which is to just get really good insurance. I see this in the comments on so many of our videos where somebody just says, just get good insurance. But because they hadn't separated out these properties, the claim did not stop at that one building. She lost 15 properties, including her personal residence. She lost her home, and she ended up in bankruptcy. And that is not a story about someone who had no insurance. That is a story about someone who thought that insurance was enough. And that's the point of this video. Landlord insurance is absolutely necessary, but it's not complete protection. An umbrella policy is useful. I see people trying to get massive umbrella policies. It's great. It's pretty inexpensive, but it is not complete protection. LLCs are awesome. They're super important, but they are not complete protection. You need to understand what each one of those things does, what they don't do, and where the holes are before a claim actually happens. Because after a claim happens, it's already written. The policy is already in place. The LLC is already formed or not formed. People have already been hired. In this case, the contractor's already been hired. Tenant's already moved in. The damage has already happened. And now you're just finding out whether the plan actually worked at the wrong time. Now, by the way, if you're a landlord, I want to hear from you in the comments. Have you ever had an insurance claim denied, underpaid, delayed, or handled in a way that just kind of shocked you? What did you learn from it? Please put it in the comments because these stories matter. A lot of landlords learn from loss. Something bad happens and they learn. If you want to avoid learning the same way they did, or I had to learn this way, a lot of times I have to hit my head against the post before I realize it's there. If you want to learn that way, then learn from their, do it yourself. Otherwise, learn from their stories. And that's what I'm trying to share with you today. I'm trying to share with you stories so that you understand how these things actually work. Because you don't want to learn by hitting your head against the post. Now, let's start with the basics. A landlord policy usually protects 3 different things. You ready? Number 1, it protects the structure, the building. Number 2, it protects your liability. Number 3, protects your lost rent. And that is the general framework. The building means the physical structure, like the roof, the walls, the flooring, the plumbing, the electrical, things attached to the property. Liability means someone says, I was hurt and you are responsible. I am suing you. Lost rent means covered loss makes the property unavailable and you lose income while that property is being repaired. We want to make sure we're catching that. Otherwise, that can be a big hole in your income. And that is what most landlords think they bought. Remember, building, liability, lost rent, those three things. But before we go any further, you need to understand something that sounds boring, but that can actually change the outcome of a claim. You're going to hear the terms DP1 and DP3. And those are dwelling policy forms. They're not the same thing. A DP1 is usually the cheap coverage, and it's called a named peril policy. It means it covers only specific things. They're listed out in the policy. Hey, it's going to cover fire. It's going to cover this. If the loss is not on that list, you do not have coverage. And when a DP1 does pay, it often pays something called cash value. Actual cash value means they subtract depreciation before you see a check. So what does that mean? I'll give you an example. Let's say a fire damages the roof of your rental. Assume it's covered because the fire was named underneath the perils covered in that policy, and it costs $25,000 to replace. Under a DP1, you may not get $25,000. You get the depreciated value of the roof that burned. In other words, what the old roof was worth after age and wear are taken out. And by the way, that could be a fraction of the real replacement cost. You get to cover the rest. And that's why cheap insurance, well, it can become very expensive. Now, DP3s are generally the stronger policy. A DP3 is usually an open peril policy for the structure. And what that means is it covers physical damage to the dwelling unless the policy specifically excludes it. It also commonly pays replacement costs on the structure instead of depreciated actual cash value, assuming, again, you meet the policy requirements. So let's say we have the same fire, same roof, very different check if the policy is a DP3 versus a DP1. And that's why before we go through the rest of this list, you should pull out your policies and find out what you actually have. If it says DP1, knowing that and changing it to a DP3 could be the difference between getting hammered and avoiding a punch. Do not hear me say that a DP3 fixes everything, by the way. It does not. A DP3 may solve the named peril problem. Hey, I want to make sure I'm covered for everything unless it's listed out as an exclusion. It may also solve the actual cash value problem on the dwelling. In that roof example, it's $25,000. I would rather get the $25,000 check versus maybe $3,000 or $4,000 that you get on an actual cash value, depending on how old that roof is. It may give you much better protection for the building, but it does not automatically fix floods. It does not automatically fix slow leaks. It does not automatically fix mold claims. It does not automatically fix tenant-caused malicious damage. It does not automatically fix wrongful evictions. And it does not automatically fix discrimination claims. And it certainly doesn't automatically fix things like pollution. It does not automatically fix things like lead paint. Even with the DP3 policy, your building can be damaged and still not covered because there's exclusion. You can be sued and still not have coverage, just like the example I gave at the very beginning. You could lose rents too and still not get reimbursed. Why? Because the policy has exclusions. It still has conditions. Remember the window washer story I started with, right? She just missed a condition not covered. And it still has limits. Might cover a certain amount too. And it still has definitions of what something is. And insurance companies, man, they live in those definitions. And we're going to walk through some major gaps. First, let's talk about property damage gaps. Then liability gaps, then the umbrella, then we get to the LLCs. Because if you own a rental property, all four of those things have to work together. And then we're going to go through about 12 gaps in total. I'm going to write these out so you can actually see them, starting with things that are like property damage that your policy does not pay. So let's start with an exclusion. I'm going to call it a gap. And we'll just start with number one. What should we start with? How about slow leaks? Water damage is one of the biggest misunderstandings in landlord insurance. Your policy may cover water damage that is sudden and accidental, like a pipe burst, a supply line just fails, a water heater ruptures. That's the kind of event that insurance is designed for. But a slow leak, well, that's different. A slow leak is usually treated as something called maintenance or wear and tear. You might hear the term deterioration or neglect or long-term seepage. These are all terms for the same thing. And remember, insurance is not your maintenance plan. And let me give you an example. I'll just say, picture Joe. He owns a rental. The supply line under the kitchen sink starts to drip. Just drip. It's not a flood. It's not like the pipe burst. Just a slow drip behind the cabinet. The tenant, because Joe's not there, the tenant doesn't notice it. Or maybe they do what a lot of tenants do and they just kind of ignore it. I'm a landlord. I know these things happen. And they just don't say anything. They see it, it's not my problem. 8 months later, had this happen, the cabinet is rotted out. And the subfloor, it's rotted out. It's damaged. And just to add a kicks, there's mold growth behind the wall. So now you have a big old repair bill. Let's just say it's $11,000. And Joe says, well, man, that's what I have insurance for. So he files a claim. And he's denied. Why? Because it was not sudden. It was gradual. And gradual damage is usually landlord's problem, our problem. Now, the fix is not complicated, but you actually have to do it. And that involves inspecting the property. And you got to have something in those leases that says the tenant is to report leaks immediately. Put it in the lease, follow up in writing, document any repairs you have to do, because the longer the water sits, the more the carrier is going to say, hey, it's not my responsibility. That's maintenance, and maintenance is on you. Gap number 2, pet damage. Pet damage over time. Same trap, different cause, right? A lot of landlords think if a tenant damages the property, well, I have insurance that'll cover it. No, if you've been around, you know that it's not the case. And it's not necessarily that it actually covers. Let's say Joe again, he rents to a tenant with 2 large dogs. And they're a great tenant. They pay on time. They never make any complaints. Joe has no complaints. They make no complaints. But over a 2-year lease, the dogs, well, they run around on the hardwood floors. Maybe they chew on some door casings. They tear up some carpet. They damage some of the baseboards. And, again, that tenant moves out and you got $9,000 repair. I've been there. This is, again, most of these I've lived. And Joe says, well, that's property damage. And the carrier says, gradual pet damage. It's normal wear and tear. And they're going to deny that claim. Why? Because it happened again over time. And that is why your real protection for pet damage isn't going to be your landlord policy. It's going to be the lease itself and those pet addendums. Some people are like, well, I don't really want to do that. I love pets and stuff. You got to get that pet deposit. You got to have that addendum. Maybe you have to increase the monthly pet rent or something like that. Like you add a surcharge because it's going to cost you. And it's documenting the condition of the property before and after to make sure, we want to make sure that if there's something that could be covered, that we get it. Do not expect your insurance company to basically be your pet damage plan, because that's not what they do. That belongs on you. That is going to be in your lease. Now, how about number 3? I'm just going to call it the roof. And what we're talking about is the example I gave you. I want to cover actual cash value. Actual cash value. I don't want to have that depreciation, because this one is sneaky, because the carrier, they don't deny the claim. They may pay it. It's just not enough to actually replace the roof. The issue is replacement cost versus actual cash value. Replacement cost means, what does it cost to replace the roof? Actual cash value means, what does it cost to replace the roof minus depreciation for what has been used. And depreciation is where landlords get punched right in the mouth. So let's say again, Joe has a 15-year-old roof. Hailstorm comes through, damages that roof. And the cost to replace that roof now is $20,000. Joe thinks he has a $20,000 claim, but the policy pays actual cash value. Oof. And that actual cash value is where you take the depreciation. I'll just say minus depreciation. I just want you guys to remember that. Actual cash value sounds great. It's not. It's nasty. So the carrier, let's just say they depreciate the roof 60%. So the value is, what do we have? Like 20, 60, $8,000. But then you got to subtract off your deductible. Let's say it's a $2,500 deductible. Ugh. And what actually happens here is Joe is out of pocket on that $20,000 roof. He's out of pocket $14,500. Now the fix is fairly simple. Call your broker and ask in writing, is my roof covered at replacement cost or this actual cash value? We do not want the actual cash value. We want the replacement cost. If it is actual cash value, ask what it costs to upgrade. That one question can be worth a fortune to you. So do it, please. Gap number 4. Mold is gold. That's what lawyers started saying when they started getting these big old mold claims. It was like, I remember the guy from the Tonight Show, Ed McMahon. I think he had like a $7 million claim that he managed to get because they said mold killed his dog. I just remember that, and then poof, you start reading about him everywhere. Mold is another one that landlords tend to misunderstand because sometimes it's excluded, sometimes it's capped, sometimes it's covered only if it comes from a covered water event. Pipe burst, mold, covered. Mold itself, no. Sometimes there's a sublimit and it's so small that it barely pays for even getting testing. So let me give you an example. Let's just say Joe has a bathroom and it has really bad ventilation, or the tenant just never turns on the fan and moisture builds up. Over a year, mold spreads beyond the wall. We have to do remediation after that tenant moves out, or if they're even in there, you still have to do the remediation. It's like a kick in the shin. Let's say that remediation bill is $12,000. Joe looks at his policy and it's covered. He's like, yes, but there's a sublimit of $5,000. Now it's $12,000. He's going to eat the other $7,000 plus a deductible. Or worse, the carrier says, hey, Joe, this came from long-term moisture. This wasn't a water event, and it's excluded. So the fix is to go in and ask about mold, fungi, and what do they call microbial growth coverage. Is it excluded? Is there a sublimit? How do I increase that? Does it include testing separately? Can I get a test so I'm not just sitting here getting punched by a tenant who's going to sue me for mold? Ask whether it includes remediation. Ask whether it applies only after a covered water loss. Is it only covered under certain circumstances? Because mold claims, they're expensive. Mold lawsuits are worse. They're horrible. I know a landlord who actually won a mold lawsuit after it was excluded from his coverage. It was an exclusion. Tenant flooded the actual house and then didn't tell him, tore out all the carpet, threw it out and everything, sued him for mold and all their items in the house. Mold spores had contaminated it. They had some guy, which it took probably a weekend class, and said, oh, you got mold spores. He ended up winning that lawsuit, but it cost him like $200,000 to fight this thing. But he won. He even got a judgment for the attorney's fees against the tenant. But what do tenants do when you get $200,000 verdicts against them? They go bankrupt and they say bye. So he got nothing, and it almost put him into bankruptcy. So the moral of that story is check your policy, and this is more important. This would have helped him out. Isolate your properties into LLCs. He could have walked away from this for next to nothing because he wasn't personally on the hook, and there wasn't much equity in that property. He could have walked away had it been isolated. But he had the same advice that I see so many people get. And again, I'm going to read them in the comments. I'm going to see some of you guys in there. And they say, just get insurance and an umbrella. LLCs are expensive. Come on, that's just dumb. You gotta isolate these properties. Otherwise, it could cause catastrophic. I mean, that's why you have the insurance in the first place. That's all an LLC really is. It's insurance. Isolates that liability so it doesn't come over and affect you. And vice versa, by the way, which we'll get into some other time. Gap number 5. You ready? You guys have seen this before. Floods. Standard landlord policies exclude floods, period. And a flood doesn't just mean a river overflowed. It can mean rising surface water, or storm runoff, water moving across the ground, water entering from outside the building. So let's just say, like in my town, Vegas, we have these big washes. So let's just say where this traps all the storm water. So Joe owns a rental near a wash, and a big storm hits, and water runs across the ground and into his first floor. Damages the drywall, maybe the flooring, and a bunch of the cabinets, so he files a claim. Denied. Why? Because the carrier calls it a flood. And flood requires a separate policy, either through the National Flood Insurance Program or a private flood carrier. If that sounds familiar, it's because the same battle tens of thousands of people lost after Hurricane Katrina, when you kept hearing about people losing against the insurance companies and wind versus flood. The policies covered wind, but they excluded flood. And the carriers called the damage flood and denied the claims. And the courts, by and large, sided with the insurance companies. This is not a new argument. This is not an argument you want to have after the water is already in your building, by the way. This is not a hurricane problem. It is a water problem. And Katrina was just the largest version of that exact situation that Joe is in. You don't have to be on the coast or next to a river to be in it, by the way. Flood maps change. Plenty of claims come from properties that were never even considered flood prone. If you do not have the coverage, you are fully exposed. If water came from outside your rental and entered the property, would your policy pay? If you do not know the answer, well, that's the problem. You find out that answer. Gap number 6. Earthquake. Same concept, different disaster, right? Earth movement is usually excluded under standard policies, general policies. That means that earthquakes are not covered unless you buy separate earthquake coverage or get an endorsement for earthquakes. And so maybe you're thinking, I'm not in an area that has earthquakes, but let's just say it's Joe again, and he lives in the West. Again, even in Vegas, we get earthquakes. Quake cracks the foundation, structural repairs run into 6 figures. Without earthquake coverage, the landlord policy may pay a big old 0. And if you invest in the West, and this is not theoretical, so let's just say California, Nevada, Oregon, Washington State, I watched a company get put out of business because of two things. It was the earthquake, but it broke a water line that then shot up into their building. Not covered. Utah, Idaho, parts of Arizona, anywhere that there's earthquake risk, that's real, right? That's never that it not happens. It just maybe it's periodically. It'll be really inexpensive if it's not that often. But if you're like in California, make sure you have this. Places where there's constant movement, make sure you have this. The fix is really easy. Just get a standalone earthquake policy or get an endorsement on your policy. But do not stop there. Ask about that deductible on this things too, because earthquake deductibles, it may be like only under catastrophic events, so they could be really large. Or sometimes they're a percentage of the insured value. So ask, what's covered, what is excluded, what's deductible, what would actually be paid if the foundation were damaged? Those are legitimate questions to ask your insurance broker. Number 7, live this one. Tenant damage. And I'm going to say, on the way out. They're moving out, they trash your house. This is the one that surprised lots of landlords. I actually represented one of my first cases as an attorney was I represented a friend who was a landlord, and the tenant just went pound, 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 pound with a hammer all throughout the property. Tenant, in this case, she was evicted, very angry. Then they decide to punch holes throughout the walls, right? And they destroy fixtures. Sometimes they steal your appliances. Sometimes they pour concrete down the toilet. Vegas, that's what we're famous for. And Joe, somebody would say, hey, I should make this claim. That's vandalism. And I have vandalism coverage. Maybe or maybe not, right? The policy may cover vandalism by strangers, but it may exclude intentional or malicious damage caused by a tenant. Maybe it excludes it from tenants, residents, someone who is lawfully on the premises. So it's not somebody who's trespassing and trashing your place. It's somebody who's invited. And that distinction matters because the person most likely to trash your rental isn't always a stranger. It may be the tenant that you're evicting or their friends. And the fix is to ask your broker specifically, does my policy cover malicious damage caused by a tenant or an invitee or somebody that's allowed to be on the property? Say it's not vandalism generally, tenant-caused malicious damage. Because with many policies, it doesn't. Now we move from damage against the building to lawsuits against you. And these are the things that can cost you more than the property itself. So when I opened this up, and I told you about the lady who lost 15 properties, the liability only occurred on one of those properties, but it cost her 15 of those properties and then some, right? So this is the big ones. We'll call the first one dog bites. Okay, animal liability. A lot of landlord policies exclude animal liability, or they exclude certain breeds. Some may have limits on coverage, and landlords oftentimes miss this out because they think it's my tenant's dog. It's not my problem, but it can become your problem. If you knew the tenant had a dangerous dog, certain breeds are considered dangerous. I'm not getting into that argument with you guys here. I'm just saying this is reality. If you knew the tenant had a dangerous dog and you didn't do anything, there's a good chance you're going to get named in that lawsuit. So let's just say, example, Joe has a tenant with a dog. Dog bites an Uber driver in the driveway. Maybe they were doing Uber Eats. The driver, they sue the tenant. That driver also sues Joe, the landlord. The allegation is that Joe knew the dog was dangerous and allowed it to remain on the property. If Joe's policy excludes animal liability, Joe may be paying defense costs and settlements out of pocket. Now, the fix is really simple. Confirm whether your liability coverage includes animal liability and whether there are breed exclusions. Then follow that. It sounds horrible, right? But you got to let your property manager know. Also, your lease should require that tenants disclose pets. They have to comply with whatever rules you put out in that lease, and they carry renter's insurance. This is important. If they have pets that could harm somebody, you want them with renter's insurance and naming you as an additional insured. And if you know that there is a dangerous animal on a property, they've nipped somebody or they've gone after some other folks, don't ignore it. Ignoring it is what creates big, massive, nasty lawsuits. All right, getting on to 9. Wrongful evictions. Oh, there's a bunch of you guys out there that love this one. This one is kind of confusing under the policy. It's often called personal injury coverage, not bodily injury, but personal injury. And personal injury can include wrongful eviction, wrongful entry, invasion of privacy, libel, slander, similar stuff like that. It's basically they're coming after you. A bare bones landlord policy won't include it, more than likely. So let's just say that Joe has a tenant who stops paying. Man, we've seen these all over the news, by the way, right? So Joe gets frustrated and he changes the locks. And he puts the tenant stuff outside. shuts off the utilities. He says, hey, this is my property. We've seen this with squatters. And then you get sued for wrongful eviction. Boom. Now Joe gets to learn a very expensive lesson. Don't do self-help evictions. If the policy does not include personal injury coverage, Joe, he has no defense. He's paying for his own lawyer. He's going to come out of pocket to pay the settlement. Depending on the state, he may even have statutory penalties. And the fix on this is really simple. Ask whether your policy includes personal injury coverage. And don't ever do self-help evictions. If you can use somebody else, use the court process because it's going to shield you. Don't just go do this stuff yourself. I know a lot of you guys like to do that and you're playing with fire. All right, number 10. I'm just going to call it discrimination. Because there's fair housing claims, but I'm just going to call it discrimination. And we'll just know it's fair housing, because fair housing claims, that's usually where these come up. They can be expensive even if you didn't do anything wrong. Applicant says, hey, you didn't rent it to me, you discriminated against me. You treated me differently because I'm a member of a protected class. They file a complaint and now you have to defend yourself. And many landlord policies exclude discrimination claims. Now, some carriers will add that coverage, but a lot of times it'll only cover your defense. If you actually did it, you're paying it out of pocket, but they'll defend you. They can, some you may be able to get defense and damages, but even then they may have low sublimits because these things can get really expensive. So again, as an example, let's say that Joe rejects an applicant and that applicant files a fair housing complaint and Joe says, I didn't do anything wrong. There was better tenants. And that may be true, but being right does not mean it's not going to cost you because you're still going to have to respond. You might have to get a lawyer and deal with some of this stuff. You may be dealing with an agency investigation. And if your policy excludes it, that's on you. That's going to be out of your pocket. So what's the fix? Number 1, ask your broker whether discrimination coverage is available and what it actually covers. Second, make sure you always run the same screening process for every applicant. Use a property manager that's just going through a very systematic process so you're less apt to get into these things. Doesn't mean they're not going to happen, by the way. Some of these tenants are just mean. But you want to minimize it to the extent possible. Number 11, pollution. And I'm going to say, I'll add in, and toxins, right? We'll just call it pollution and toxin because this is where there's usually a broad pollution exclusion, and it's written broadly on purpose by the insurance companies. It's usually in their benefit when they do this. You may think pollution means something like, hey, I have a chemical spill, or there's industrial waste on my property. Your policy may treat other things as pollution too. Like, for example, let's say you have a faulty furnace and it leaks carbon monoxide. Or the tenant ends up in the hospital and the tenant sues you. You think, well, that's a bodily injury claim. My liability coverage should cover it. And the carrier points to the pollution exclusion, and now you're going to have to fight it on your own. Same issue can come up with fuel leaks, chemical exposure, sewage, smoke, other substances depending on the policy language. So, fixes, maintain your furnaces, your water heaters, maintains anything that burns fuel. And it's always wise to install and check like these carbon monoxide detectors. They're fairly inexpensive. And then document your inspections. If you're going in there annually, if you have a property manager, make sure that they're doing it. And then ask your broker what your pollution exclusion actually says. Don't make assumption. Actually look at that policy. Actually take a look, go through it with your broker, read it. Gap number 12. This one's been around forever. You guys are probably familiar with this because you're always having to sign stuff about lead paint. If you own anything before I think it was 1978. Yeah, I think it was like 1978. I believe that's the year. Pay attention to this because most policies have lead paint exclusions. Some exclude both the defense costs and damages, right? So maybe some will defend the claim, but they won't pay damages. So they'll fight it for you. They'll provide you with an attorney, but they won't cover anything. And that could be a very dangerous distinction, by the way, right? You don't want to be on the hook for this type of stuff. So let's just say that, hey, Joe went out and bought an older duplex. Family moves in. They didn't do any lead paint abatement. They didn't do anything. Then the toddler of that family tests with elevated lead levels, and they're going to sue you. And the carrier's going to say, hey, Joe, we'll defend you, but man, if damages are awarded, that's on your dime. Lead is excluded. Or, more likely than not, they're just going to deny the whole thing because this was a huge area. You get hit hard. So now Joe is dealing with a serious health claim, a child expert witness that hey, we're going to have testing done, remediation. Gosh, the damage number could be really, really big. And the fix isn't just like insurance on this, it's compliance. So if you buy a pre-1978 property, gosh, they require lead-based paint disclosures. And you got to take a look at this stuff. Renovations may trigger, there's specific safe renovation rules that you got to follow. You need to document it. That'll help protect you. You need proper notices. You need proper contractors when you do lead paint abatement. And with lead, prevention is the real coverage here, right? Insurance may not be there when you need it, so it may go. All right, I'm going to give you a little bonus one, by the way. Here, I'm just going to call this bonus, and that is your property manager. If you use a property manager, like I use a property manager, but I don't assume that that's just going to solve the problem, because property manager reduces work, it kind of shifts liability a little bit over, but it doesn't eliminate it. You need to understand how your insurance could apply. You want the property manager added to your policy as an additional insured if your carrier will allow it. You want to make sure if they come after you and your property manager that it's one claim. Not every property will, or not every carrier will add them on. Some will, some won't, right? But if you can, add them and then flip it around. You also want to be listed as an additional insured on your property manager's policy, if possible. So if they're sued, because everybody's going to get sued, you want them, if they have a great policy, maybe they're going to cover you. Maybe your policy won't cover you, but their policy will. So the property manager gets sued, owner gets sued, LLC gets sued, everybody gets sued. Maintenance person may get dragged in, contractors may get drug in. You don't want to find out after the lawsuit that nobody had coverage, or just make sure that you're on it if possible. And that brings us back to the story I told you at the very beginning. In the case where the lady lost 15 properties and we had 2 wrongful deaths, it was the property manager who hired the contractor. The contractor's license and bond had lapsed. They didn't even mean to. What it came out is that they just forgotten to pay it. Nobody checked. The carrier denied the coverage. So the umbrella didn't kick in. The landlord was exposed personally, and she didn't have any LLCs, so everything was in one big old basket. Oof. So if you use a property manager, you're going to ask them, sometimes it seems like hard questions. Are they, hey, do you want me to add you as an additional insured on my policy? Or can you add me as an additional insured on your policy? It's usually not a big thing. Do they carry errors and omission coverage? Do they carry general liability? Do they have workers' comp if they have employees? Do you verify contractor license and insurance before vendors step onto your property? Do they document it? How do you document it? And that stuff really matters, because I thought they had insurance, or I thought they had a bond is not a defense. Hey, I thought so. Doesn't work. Okay. So this is where a lot of people, you'll say, fine, I'm just going to get an umbrella policy. That'll help me. And by the way, I like umbrella policies. I think they're one of the best dollar for dollar buys in the insurance world. They're really cheap. $1 million policy may cost you $200 a year. But you have to understand what they do. An umbrella policy is excess liability coverage. It sits on top of your underlying liability policy. If your landlord policy has $500,000 of liability coverage, you can have a $1 million umbrella. The umbrella may kick in after the underlying policy limit is exhausted. So they go through the 500,000, I got another million. So I'm not going to be paying it personally, and that's pretty powerful. If a serious dog bite, slip and fall, or injury claim blows past that base policy, the umbrella steps in. But there are really three catches. Catch number one, the umbrella policy generally follows the underlying policy. If the underlying policy excludes the claim, the umbrella, it may not drop down and magically cover it. That's what happened in the original story and when I opened up. And then once the primary coverage has failed, the umbrella has nothing to sit on top of, so it doesn't kick in. Catch number two, the umbrella does not cover your property damage. So remember the slow leak, the actual cash value of the roof, the mold, the flood, earthquakes, tenant damage. Those are not liability claims against you. Those are property claims, and the umbrella does not fix that. Number three, the umbrella may also exclude things like wrongful eviction, discrimination, pollution, lead paint, anything, intentional acts, claims tied to business operations. Those things could be excluded. So you got to look at that umbrella policy. Yes. So I'll just say this. Yes, consider an umbrella. Great value. But do not use it as an excuse to ignore reading your actual policy, the main primary policy. Do not ignore your exclusions and conditions of the policy underneath it, because it could cost you that umbrella policy. If you own rentals and you have real net worth to protect, yes, that umbrella policy should be part of the conversation. If you're worth $1 million, $2 million, it's not crazy. Again, often the cost is a few $100 a year. It's not much, but remember what it is. It raises your liability ceiling. It does not patch every hole in your coverage. And that's where we see serious investors use LLCs. A lot of landlords think, I have insurance, I have an LLC, so I'm fine. Maybe, but only if you understand what the LLC actually does. LLC is not like just straight up insurance of itself. It is a liability container. It separates asset, but it does not pay claims. It does not hire your lawyer. It does not rebuild your property. It does not cover exclusions. It does not contain a fire. It does not put the fire out. Here is what a LLC will not do. Number one, your LLC, again, I have a little property. I put it in my LLC. It's never going to help you. Even if you do that, if I have a personal guarantee on that property, it's not going to help. If you sign the loan personally, the bank doesn't care that it's an LLC. You guaranteed it, and they can come after you. That LLC is not going to protect you in the case of a personal guarantee. Number two, an LLC will not survive crappy bookkeeping. If you're sloppy in your bookkeeping, if the rent goes into your personal account, if your expenses are paid from personal funds, and you're ignoring that LLC, and maybe it's just a name on paper, those are called veil piercing arguments. It will pierce that veil, the corporate veil, the LLC veil. You want to make sure you have separate bank accounts, separate books, proper records, and do not commingle me with that LLC. I want to stay on the outside of it. The LLC steps in and handles itself. Number three, the LLC does not protect that property that is inside the LLC for the claims that arise on that property. And that's critical. If a rental property is inside the LLC and someone gets hurt on that property, the equity in that property is actually exposed. The cash flow from that property is exposed. And this is why you often hear folks like me, asset protection attorneys, talk about equity stripping, pulling the equity out. Like, let's get the cash out of that LLC so that makes the target smaller. This leaves a smaller amount of equity in the property. Still have the cash flow issue if they can get their hands on it. Cash flow property, there's value there. But you don't want them thinking, hey, you're going to have a big cash day. The LLC helps protect the assets that are outside of it. It does not make the property itself that's inside there bulletproof. If you put multiple properties in one LLC, one lawsuit can affect all of them. So if I have a whole bunch, here's my LLC. I have 3 properties, pretend those are houses. Something happens on property 1, they can come take the other 2. And that is a general rule. You're going to hear people say 1 property per LLC. Do not put all the rentals in the same bucket and then act surprised when one fire threatens the whole bucket. All right. Number 5, the LLC does not replace insurance. A lot of folks are arguing, do I insurance or an LLC? No, it's always and. You still need your insurance policy. You still need an umbrella, preferably a commercial policy. You get an LLC and you write it underneath the LLC. If you have a holding LLC, the way we do it at Anderson, you oftentimes hear us talking about red box, blue box. The blue box gets a commercial policy, names you as well. It's a commercial policy. It'll still cover you personally, because you want to make sure the LLCs are covered, because a personal umbrella will usually not cover your LLC. You got to make sure that the insurance company knows you're using this in a structure so they can write the right type of policy. An LLC and insurance are partners. They're not substitutes. They work together. Insurance, it pays claims. The LLC contains the claim. The umbrella raises the ceiling that will pay that claim. If you miss one of those, you're going to have a hole. And lawsuits, they're really good. Like, good lawyers are going to find the holes. So here's the real question. It's not, do I have insurance? Questions really, that's, my opinion, is too vague. Better question is, where am I exposed? Ask these questions. You ready? Do I have DP1 or DP3? Is my policy named peril or open peril? Is my roof covered at replacement cost, or is it this horrible actual cash value? Do I have flood insurance? Do I have coverage? Do I have earthquake coverage? Do I have mold coverage? On any of these, is there a sublimit? Do I have tenant caused malicious damage coverage? Do I have animal liability coverage? Do I have personal injury coverage for wrongful eviction? It sounds weird, right? But that wrongful eviction covered under something called personal injury. Do I have discrimination or fair housing defense coverage? Will it pay the claim or just provide me the defense? Do I have pollution coverage that could wipe out something like a carbon monoxide claim? Do I have lead exclusions on properties that were built, let's say, pre-1978? Are my property managers properly insured? Better yet, are our contractors that are coming on that property properly insured? Are licenses and insurance certificates being verified, not just collected? Do I have an umbrella policy? Are my properties separated in the right LLCs? Are my books clean? Am I actually keeping books on these things? And that's kind of the audit. I just gave you a laundry list. Now, some of you guys are like, oh, I hate that. Just go back and re-listen to it, write them down, talk to your agent. And by the way, I really want to hear from real estate investors out there, like in the comments. What is the most expensive insurance or asset protection mistake you've seen a landlord make? It could be yours, it could be a client, it could be another investor. Just what's the biggest mistake? Share your stories, because this is how people learn before they become the next example. I don't want you guys, again, hitting the post. Read somebody else's situation where they did it and learn from it. And so here's the bottom line. Landlord insurance is necessary, but it's not enough. An umbrella policy is smart, but it's not enough. An LLC is critical, but by itself, it's not enough. You need them working together. The right insurance, the right umbrella policy, the right entity structure, the right property management, the right paperwork, the right timing. And you need to know what gaps you have. Do I have any of these gaps? Before a loss happens. Because after the loss happens, You don't get to go back in and rewrite your policy. I'd like to add this back in. Doesn't work that way. You don't get to go back and form an LLC after the fact. Hey, I really meant to have this in an LLC. I know you're coming after me personally. Doesn't work that way. You don't get to go back and recheck a contractor's license to somebody that did work on your property. You don't get to go back in and fix the lease after something bad happens. You're stuck with the structure you had on the day something went wrong. For that claim, at least. You can always fix things for others, but you are exposed on that one. And by the way, if you want help understanding how this fits into your asset protection plan, I'm going to give you two simple options. Option number one, attend our tax and asset protection workshop. Anderson's been teaching the tax and asset protection workshop since the 90s. It's a one-day workshop where we go through everything from trusts, LLCs, for real estate investors. We do some that are for stock traders, but for this purpose, that you really want to be sticking with the real estate one, I'll put a link. You can absolutely register 100% free. You can go learn this stuff. Or if you know, hey, I need some help personally, I need a one-on-one, then book a consult with one of the advisors at Anderson Business Advisors. Again, complimentary. I'll put the links down in the show notes. Both are free. If you own rentals and you're not sure where the holes are, use one of those links. And if you like this video, click like. And if you like this type of content, subscribe to the channel. It really helps us when you do that. And if somebody needs to hear this, if you know, hey, like my cousin Ned, forward it to them and share it with them, please. This is free information that I give out. I've been a tax attorney for a long time, been a real estate investor for a long time, and I just try to provide valuable information that helps other people. So share it, and I'll see you in the next one.